Hello traders, welcome to your Follow the Bots S&P 500 Daily Market Recap.
Hello traders, Bill Duryea here with Follow the Bots. Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels for the S&P 500 E-mini. Today is Monday, August 26th, 2013. Following the breakdown below the upper supply cluster limit at or near 1670, last week the S&P auctioned down to 1630. The market held support at 1630 and auctioned back up through the prior 3-day trading range. On Friday, the market traded above the prior 4-day trading range, ending Friday's session at or near the high at 1661. Coming into today's session, we noted in Sunday's market recap, as well as in our daily market briefing, that if the S&P continued to auction up at or near the breakdown point at 1670, we would expect to see the market encounter resistance and pull back into the developing trading range. The developing trading range starts at the breakdown point at 1670 and includes last week's low at 1631. The midpoint of the trading range is located at or near 1650. During Friday's rally, the market pulled back at or near 1650. For a more detailed look at the recent developing trading range, we'll focus our attention on a 14-tick range chart. On this chart, we can see the market structure as the price path turned and reversed up off the low and auctioned back up to what had been the prior 3-day high, and eventually, in the context of today's session, rallied back up at or near the breakdown point at 1670. As the market traded up off of last Thursday's low, there was a minor pullback at or near 1640. Additionally, on Thursday, there was a late-in-the-day pullback down at or near 1647. On Friday, at the open, the S&P pulled back to 1650, and later in the day, after auctioning back up above the opening range high, price pulled back to 1652. Today's rally back up at or near the breakout point of the current decline completes the short covering rally through the developing trading range. As I mentioned at the start of our discussion, the S&P ended Friday's session at the high, at or near 1661. Friday's short covering rally continued during Sunday's Globex session, with the S&P trading up to 1667. Just 3 points shy of the breakdown point at 1670. After rallying up to 1667, the S&P pulled back to 1658. All this occurred in the overnight session. Prior to Monday's open, S&P futures had traded back up to 1663. The market made a modest pullback down to 1660, but basically traded within the trading range of Friday's settlement. There was no selling pressure at the open, and hence the market did not pull back to retest the overnight low. Instead, buying interest entered at the open, and price gradually auctioned back up to retest the overnight high at 1667. As the market traded to the overnight high, the order flow events associated with the retracement to the Globex high, as surfaced in the order flow monitor, indicated buy programs waning. The market pulled back modestly off the high and traded down to 1664. After pulling back down off the high, the price action went flat for the better part of an hour. There was no significant price change. The market traded between 1662 and 1663.5. It was not until late in the day that selling pressure entered the market, and the S&P broke down below the non-directional 2-point trading range and auctioned back down into Friday's distribution, trading initially to our first pullback target at or near 1653. The selling pressure backed away during the initial pullback, and the market auctioned back up to 1659, where the selling pressure accelerated as price traded below the opening range low. There was no buying interest during the retracement back to 1659, and the selling pressure returned. S&P futures auctioned down to the low and closed the session at the low. Our second pullback target is down at 1651. We would expect to see the selling pressure end during a pullback to the 1650-1651 price level, as it represents the midpoint of the current developing trading range. Indeed, should the market pull back to 1650-1651 and hold support, we would expect to see the S&P auction back above Friday's close and attempt to retest today's high at 1667. In the event the buy reaction during the pullback is only modest, and the S&P fails to trade above Friday's close at 1661, and pulls back a second time to the midpoint of the trading range, we would then expect to see selling pressure increase. There is a minor reference below 1651, as noted during Thursday's market development at 1647. Should support breach there, the likelihood would increase that the S&P will pull back at or near Thursday's open down at 1640. Order flow events, as you see surfaced here on this 5-tick chart, are a great aid to the astute observer who understands the key support and resistance levels. They allow the observer to participate in what we refer to as 21st century tape reading. The algorithms that are a part of the order flow monitor read the high-frequency computerized program trades and alert the trader to events such as buying interest waning and/or high-frequency buy surges. The combination of understanding the expected reaction at key support and resistance levels, along with being able to read the order flow events that are associated with the expected outcome, have proven to be a great aid to traders faced with having to trade alongside of the high-frequency computerized trading program, otherwise referred to as the algorithmic trading bots. That concludes our daily recap for this Monday, August 26th. If you would like to follow our real-time commentary, we invite you to visit us on the web at www.followthebots.com. We'll look forward to seeing you some morning at the open.
Follow the Bots offers a completely new approach for traders. Follow the Bots provides you with tools that will allow you to trade with the bots and not against them. To learn more, take a tour of www.followthebots.com.